Well, another side to financial literacy is the different communities which can benefit from this type of education. It's not just an English language issue, but what about those who speak other languages? David Musto, professor of finance here at the Wharton School and director of the Stevens Center for Innovation in Finance, joins us with more on that. David, great to talk to you again. How have you been?
That's great to be back.
Thank you. And I understand that you are doing work right now on a Spanish language program around financial literacy.
Well, we're just getting started on that. Yes, this is actually an inbound inquiry that we got to the Stevens Center from some bankers, really, discussing how they do business with, especially the immigrant community, people coming recently from other countries where often they've had very bad experiences with the financial services industry in their own country. And this has made them very wary of engaging with financial services in this country, understandably. And so the question is, how can people be educated about how the financial system works in this country? What are the safeguards, and what are the products? How to engage with financial service providers safely in this country. So that's a project we're just embarking on.
Right. And because when you're talking about somebody coming into this country for the first time, there's probably a lot of uneasiness and hesitancy to begin with. And so by being able to bring forward a program like this, potentially, you're hopefully alleviating some of those potential issues.
Yeah, yeah, that's right. I think there are a lot of financial products that they're just very helpful for a family, and to live without that, to put your money in the mattress because of what happened in another country, it's just you're just missing out on a lot. Especially now that we have this higher inflation, the cost of not minding your money carefully has really gone up.
How much do you think what we've gone through here in the last several months, actually, let's even expand it because of the impact of the pandemic and now with inflation, has impacted people's understanding or at least want to understand more about finance, about financial operations so that they can be better prepared?
Well, yeah, it's we think I've been around the block, yeah, and I've been through several cycles of the economy. And those of us who remember the financial crisis well saw a lot of banks closed over those months. Just every Friday, more banks being closed, and we saw how it worked. We saw the protections afforded to smaller depositors, and we just saw the whole. We saw the famous line about when you have a crisis, you see the financial services industry in its underwear, right? When you've seen that, you understand the bad state, and you understand what's safe and what isn't safe. And for those people who were, now it's getting to be a while ago. That all happened 14, 15 years ago. And we haven't been through that. Of course, people have been through similar problems in their own home countries, which have less protection. So yeah, just younger people in general just haven't seen what we've seen, and it's just there's a lot of work to do to just bring people to the comfort level they need to engage safely, without, of course, uh, getting involved in things that are targeted at newcomers that may be scams.
What do you think that then we as a country have kind of missed in terms of financial literacy, and what do you think we need to employ as we move forward to improve that as well?
Well, so I have also involved in overseeing a financial literacy course for high school students. Right now, we have several hundred students taking this. It's a Penn course. They're taking it for Penn course credit at their high schools right now. Just wrapping that course up, and so I had to think hard about this. What do you need to know to make your financial decisions that you have to make uh, wisely, and also to be an informed voter? And one thing I learned, just for example, so this is aimed at 17-year-olds. One of the most generous programs the federal government has is the income-driven repayment of student loans. It's a generous program, and it's likely to become more generous. And yet, the high school students I spoke with didn't even know about it. Very rarely do they have even heard about it. And yet, here's this program meant to soften the blow of taking out a loan and ending up in hard times. And therefore, because it softens the blow, it's an invitation to take a risk you might not otherwise take with your education. And but if you don't know about it in advance, then we're not getting the benefit of these students taking that risk. And so that's a way that financial literacy will hopefully pay off, for everybody.
I know you also, in your research, have focused on consumer credit.
Yeah.
And if I can have you speak to the importance of that as a component of financial literacy for either young people growing up or for adults as well.
Yeah. And consumer credit is a big part of that course. I have trying to introduce students to what they're going to see as far as not just the student loans, but credit cards, car loans, other related products, and also to sort of understand the very dire consequences of running out of cash, and then having overdraft protection and payday loans and credit card debt, extremely expensive ways to make it through a tough moment. This is all if you could just avoid falling into those traps, which are so hard to get out of. Your life is just so much brighter. So yeah, I think, and again, people who went through the financial crisis, you can see how there was a lot of wariness about getting into debt after that, which I think you and I can agree is probably on the balance a healthy thing. But you don't want to entirely avoid using consumer credit products, just it's a way buy a house and pay for it over the years you enjoy it, or buy a car and pay for it over the years you enjoy that, or take out a student loan, become educated, and pay the loan off of the human capital you built. These are all great things you can do with consumer credit if you're smart about it.
Well, and I was going to add in the credit score itself and the impact of paying those bills off on time versus not paying them off, and the understanding about how that can play into some of those life decisions as people go on with the different components of their life.
Absolutely, yes. And actually, I remember last time I think we spoke, we were also talking about the importance of taking a look at your credit file,
Yeah.
which you can do for free. Don't let anyone charge you to look for it. It's free, and you often find mistakes. And if you find mistakes, that your credit bureau is obliged to take you seriously and remove the mistake. So take a look, because that can also, in addition to the fact that just difficulties you've had in the past are going to feed through to a lower credit score. On top of that, there's so much identity theft and fraud and all these things going on these days. There could be something that you have no idea it's dragging you down until you take a look.
Are you more optimistic or pessimistic right now in terms of how people are thinking about financial literacy and the want to learn more about a lot of these issues?
Yeah, it is a big push at the state level in many states to require financial literacy. There certainly was no requirement for me in the class of 1983 in high school. Right? The thought of teaching financial literacy, I don't think I came up at all.
Right.
And I certainly took out student loans as much as I could to go to college. Yeah, I just did it. I figured, well, got to do it. But I really didn't think through what I was getting myself into. Probably would have done it anyhow, but it certainly would have helped. And that was my first interaction with consumer credit, which is, as you can see, it's one of the biggest decisions we make to take out loans that big, and we're doing it at 17 years old. That is, that's sort of a big mismatch there in how ready we are and how big a decision we're making.
Well, and the program that you do is fantastic, and I think it is, kind of the natural question of where we stand right now in this country around financial literacy, the resources or lack thereof at times to be able to have those types of courses in our schools, so that especially teenagers have kind of that basic understanding for when they go off to college or when they get that first job, so that they can, be prepared for some of these things that get thrown at them.
Well, absolutely. Yeah. I mean, you said, say, starting your first job, when you get in your first job, you're probably going to have a defined contribution 401k plan. It's probably going to be the way your retirement is funded. And, this is, you're making a very decision about a very far off thing, but you're making it right now. You walk in there, and these days, one thing I've learned is that most people, when they walk in that job, when they click a box, and that on that first day during your orientation, they click the box for the target date fund, that with the date that's approximately when they would retire, 40, 45 years later.
Mhm.
Everyone, not everyone, most people choose that. And what is it? What does it do? That's something that we decided we would tackle in this course, even though it's a tremendously far off, payout, but you're making the decision now. So you should know what you're doing.
And not only, but just, clicking that button and not doing anything with it over the next 30, 35, 40 years, but really having kind of an active view of what's in there, and the benefits that you're getting, and how you can continue to improve it over the course of time.
Yeah, yeah. Well, it's just a fact of life that, compared to my parents' generation, we just have all these financial decisions to make for ourselves.
Yeah.
We don't have the pension plan that people had 50 years ago. This is it. Well, there's Social Security, and then there's this, and that's it. And so it really is, and that money, what's going on with the money in your account, well, you just simply have to take that seriously. And that leads to another point, which is to talk about Social Security. Another thing that we were thinking about with designing this course is to help students become informed voters and citizens, and to tackle the issues that maybe there's not so much they can do about it, except that they are voters that have a decision to make. And with Social Security, there's always talk about how the Social Security Trust Fund is going to be depleted in 10 years, and what does that mean? And so we took a moment in our course to spell out, well, this is how Social Security works. This is the trust fund. This is what they mean when they say it's going to be depleted. Here's the question, and you're going to be, as a voter, going to be a decision maker about what happens next.
David, great to have you with us. Thanks for all the insight, and good luck with the class.
Thanks a lot.
Thank you. David Musto, who's a professor of finance here at Wharton and also director of the Stevens Center for Innovation in Finance.